from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In for Emily Chang, this is Bloomberg Technology, and coming up this hour, a Bloomberg scoop. Apple is putting the pedal to the metal by refocusing its car ambitions on self-driving capabilities. New car chief Kevin Lynch pushing for a debut as early as 2025. We bring you the details, plus growing calls for the Activision CEO, that's Bobby Kotick, to step down as the company's frat house culture claims continue to spread. We talk to an industry insider for reaction. And the supply chain drags on Sonos. Shares down after reporting earnings. We discuss with the CEO, Patrick Spence, his outlook on the holiday season later this hour. We'll get to all of that in just a moment, but first, let's get a look at the markets. Tech stocks actually doing pretty well on the day. Equity markets now at a new record high, but it was a pretty volatile session ahead, of course, of the all-important options expiring tomorrow. Bloomberg's Ed Ludlow joins us for a breakdown.
Yeah, you're exactly right. It's all of the above. 66th record for the S&P 500 this year, but tech in the driving seat. You see the outperformance, right, in the NASDAQ 100, a really tech-heavy index. And yes, you're right about OPEX. 95.5 million options expiring Friday. We're braced for some volatility. But don't forget about inflation, right, Caroline? You know, the macro doesn't go away. Just because in the short term we're focused on other items. I think JP Morgan also joined the conversation on Thursday about the idea we'll get a rate hike in 2022, bringing forward the kind of dot plot we see at the moment. There was some selling in cryptocurrencies. You see that reflected in the Bloomberg Galaxy Crypto Index. And it's interesting, Bitcoin's down below $57,000, a fifth day of declines, worst streak since May. So I want to show you this chart in my Bloomberg terminal. It's the correlation between tech stocks and Bitcoin, and it's basically zero now. The correlation is disappearing. It's traded with tech stocks higher over the pandemic period. But it raises this question, right? I've heard you talk about inflation for days, Caroline. Is Bitcoin an inflation hedge? Is it going to behave like a haven asset in due course? Who knows? But it's behaving very differently at the moment.
And, well, interesting that we keep a close eye on the selling pressure there. There was selling pressure on some of the companies coming with their earnings after hours, in particular a key chip maker.
Yeah, Applied Materials. Remember, that's a company that actually makes the machines that manufacture the semiconductors. And there was a lot of optimism around them that they'll benefit from investments in chip infrastructure. Well, you see the shares down in after-hours trading because they are so hampered by supply chain constraints. They are not able to meet the demand that's out there from chip makers who are their customers. They cannot get the machines to them. And that shows what a double-edged sword the situation is. Similarly with Rostors, it was actually higher initially. It's lower now. You know, the concern here is that the consumer is not going to tolerate that higher inflation. Who is going to absorb the cost? Is it something that the retailers take a hit on the bottom line, or do they pass the cost on to the consumer? And funnily enough, I brought Rostors up. It's not really a tech company, right? It doesn't have a huge e-commerce play, but foot traffic for in-stores last week really grew year on year. And so it's this idea we're not actually spending online anyway. You'd expect Rostors to benefit. Yeah,
and it's interesting that perhaps the Walmarts, the Targets that are sucking up the margin hit have been punished for it. Some of the companies that are able to pass it on, the Macy's and the like, have done very well. There is this theme that Rostors did actually manage to its own inventories very well. And this is what's interesting is when you look at, you were just talking about the chip equipment maker, but then a chip maker today flying high, and I think of NVIDIA, because it's actually doing really well on managing these supply chain headaches.
Right, biggest points gainer on the NASDAQ 100, S&P 500, best performer in percentage terms. We paint all these companies, whether they're semiconductor companies, whether they're retailers, with the same brush. Higher input costs and inflation, supply chain constraints. But you have to remember, these companies have different managements. In the case of Macy's, up 21%. They have a CFO who has been savage. He has been in beast mode on cost cutting. They really protected their bottom line. And they talked about demand from the consumer going into the holiday quarter. Similar with NVIDIA, they were able to grow gross margin by mixing to higher priced items. They're selling their most expensive chips and trying to get their hands on those before they sell the lower price ones. It's a smart play in a really tough environment.
And very smart reporting from you, Ed Ludlow. We thank you, keeping us up to speed with all the earnings and all the selling pressure, and those that are winning, those that are losing. Tell you who's winning today. Well, our own Mark Gurman, who had a great scoop that pushed Apple, of course, on the news of it. It's accelerating its development of its electric car and is refocusing the project around, well, perhaps full autonomous version of this car. And we are currently going to dig into this particular scoop with our own Mark Gurman, who's here with us. And talk to us about this refocus, the fully self-driving capability. Why? Why leapfrog the sort of half versions we currently have?
Well, that's what Apple does, right? They only enter new product categories when they're able to come out with the leapfrog product. You saw that with the original iPhone. You saw that with the iPad. You saw that with the Apple Watch. Now it's the car's turn, and they want to release something that really no one else has really been successfully able to nail, and that's what they're doing for this. That's how it's been described to me. They really want to create a car that's a hands-free experience. They're redesigning the interior and exterior around the idea of having a car with no wheels or pedals.
Okay, as soon as next year, that's fast. That is the regulation there, Mark?
Oh, not next year, 2025. 2025 is when they want to debut the car as early as. Perhaps it's going to launch, actually hit the streets a few years after that, but their current target is 2025 for an actual announcement.
And tell us what the driving force is from an executive perspective here. Who's putting this pedal to the metal to a certain extent?
So the new person in charge, his name is Kevin Lynch. He was one of the major pioneers behind the Apple Watch. So he's the guy at Apple who has the experience launching from the beginning to the release the last actual new product category from Apple. And this is the person now in charge of the car. He's a software expert, a management expert. He's not a car expert. He's not an autonomy expert. But they do have the right people under him that he's working with to really push this thing forward. And since he took that top job a few months ago, we really have seen this acceleration and this refocusing around somewhat of a level 5 car approach.
I mean, Mark, how much market share inherently do they want to win? How ubiquitous do they want a car to become when they are clearly, so successful in getting the phone in our hands, the watches in our hands, the services?
Yeah, but before really knowing what your market share is going to look like, how many sales you're going to have, how much money you're going to need to make, what you really need to do first in this car space is settle on a business model, right? There are a few approaches Apple can take. There's the individual ownership approach, which I ultimately expect Apple will have, but there's also the fleet approach, perhaps developing a service similar to Waymo or Uber or Lyft, where you have self-driving taxis of sorts rolling through city streets. So I think likely ownership, individual ownership is going to be the route because that is the Apple business model.
Mark Gurman, congratulations on the scoop. Thanks for talking us through it. Meanwhile, sticking with Apple, the company has chosen February the 1st as the deadline for corporate employees to start their return to the office. It's a slight delay from its previous goal of January, marking a key step towards getting its operations back to normal after the pandemic. Now, employees are asked to work from offices now 3 days per week. Coming up, we'll follow up with Activision. That's as investors and others from the gaming industry are weighing in on whether Activision CEO Bobby Kotick could step down or should step down, and how they can make the gaming industry as a whole more inclusive. That's next. This is Bloomberg. So calls are growing for the resignation of Activision CEO Bobby Kotick. That's after allegations he was actually aware of the sexual misconduct at the company years before a California lawsuit made them public this summer. Now, Activision employees and some shareholders are asking for his resignation, while other gaming companies are actually weighing in and distancing themselves from Activision, like PlayStation and Xbox. Let's bring in Jessica Ravolo. She is going to dissect this for us. She is, of course, the CEO and co-founder of casual gaming platform Arcadium, 20 years in existence. You founded it with your husband. And I'm fascinated, as a female who has worked in this industry for so long, how surprised or perhaps even disheartened how long it has taken for sort of accountability to be asked of the CEO here.
Yeah, completely unsurprised, unfortunately. This is something that has been a systemic problem in gaming now since as long as I've been in it, so for 20 years. I think that what I'm encouraged to see is just the growing chorus of voices who are demanding more than just saying, I will take a pay cut and we have zero tolerance, and then the employees not seeing any difference inside their organization.
Yeah, exactly. So is there change afoot, do you think? Is it going to be loss of talent that really makes a change of a culture internally?
I don't think, unfortunately, it will be loss of talent. I do think that the drop that we're seeing in Activision's share price, specifically over the last couple of days, the recent calls by PlayStation and Xbox, I think are very, very sobering, hopefully, to Activision and to their board of directors, that this is not just something that is going to go away. This is something that is going to continue until real change is made inside the organization.
The very systemic issue of this, Jessica, and give us your experience here, having for so long built a very successful business within gaming and also served prior to that within the gaming industry and built such, success stories. How much does the issue be pervasive when female gamers in and of themselves have a problem penetrating the space as well? If now we see it from a professional level with esports.
Yeah. So, I mean, it's been, as I mentioned, a problem for as long as I can remember. I remember going to or hearing about conferences where, there was a lot of drinking and women were made to feel uncomfortable. Obviously, if you just look at the statistics of the number of executives in large gaming companies or most gaming companies who are women, it's very, very small. My company is unfortunately the exception to that rule. 50% of our executive team is female, 35% of our entire staff is female. And I think that comes partly from the fact that they know that at Arcadium it's going to be a different culture, and that's just not necessarily, unfortunately, a culture that has been embraced in some of the other gaming companies. My hope is that that will change. I think it has to change because our customers are women. 50% of our customers are women, especially in casual games. This is worldwide. So you're serving a customer, and yet internally you don't have a representation of that customer on your staff. That's a problem.
I mean, look, I'm acutely aware that we're two women here discussing this, but there are, of course, men who have been particularly supportive of females within the gaming space. And of course, you co-founded your business with your husband. There is one. I mean, talk to us about what male focus has been within the system and how they've been helping to a certain extent in the last year or so.
Yeah, well, I think that the recent letters by Phil Spencer and Jim Ryan of Xbox and PlayStation to their staff saying that they are taking this seriously as a partner of Activision, and they're looking into this and they care about this and they will not tolerate this kind of misconduct is a very, very encouraging sign for the industry.
What about, as we keep on now currently talk about the prevalence, the importance of gaming within Web 3.0, within the metaverse in particular, and there is a worry, I see it when you look at the crypto space, NFTs as well, that we need to ensure that some of the negative side of what's been built so far within technology. We're not just talking about lack of diversity in terms of women, but people of color, of all manners of what your sexual preferences are. How are you ensuring that the next iteration of the internet, the next iteration of gaming doesn't go that way, that we can ensure that we reduce bias in all its forms?
Yeah, that's a great question. I mean, I don't have high hopes right now for what will likely take place in the metaverse, at least in the initial iterations of it. And obviously, gaming is leading the way in the metaverse. Things like Roblox and Minecraft have already been kind of early, I think, views of what people are going to be experiencing in the future. I think it's going to be quite some time before people are just like walking around in goggles. I think we've got a little time before that happens. And, these systems that are already pre-existing need to be very heavily kind of policed by community people, and they tend to go in not great directions in terms of harassment and lack of diversity and lack of inclusion. For my small piece of the puzzle, all I can do is control my own organization, and the player avatars that we have in our mobile games and on Arcadium.com represent all ages, all diversities, genders. So we're trying to do our part to ensure that our little slice of gaming at least is a little bit more representative of how we'd like to see the gaming world at large.
Talk to us about ages, because you have 3 sons, I believe, as well. How are we looking to protect children in the next iteration of gaming as well?
Yeah, well, I mean, my company focuses on older adults, so we focus on a 35 plus market. So I definitely feel a little bit differently about my customers, and then I feel differently when I'm watching my son's game. But I will say that there are companies that are doing this really well. I think Roblox is an example of that, as a company that's taken their community and the protection of the children in that community very seriously, and I think have been kind of chosen as an example for places like, Facebook that have maybe not done as good a job in policing the kinds of talk on their platforms.
Jessica, just for any startup entrepreneur who's listening, anyone looking to be changing the culture or looking at the culture of the business they're building, are there any sort of tangible pieces of advice, things that you did, you and indeed your husband did, to ensure that people knew it would be an enjoyable, inclusive culture as and when they moved to Arcadium?
Yeah, I mean, I think that we've always taken a people-first approach to the building of our business. Our employees come first. We know if our employees are happy and fulfilled and growing, that's going to come through in the products they're creating. That's going to make customers happy, and that's eventually going to affect the bottom line positively. So it's not that hard to act with integrity, to genuinely care about people, and to want them to do well professionally and personally. And I think when you do that, it comes through in your actions, it comes through in your policies, it comes through in your one-off discussions when you're having lunch with someone, and it just kind of builds on that.
I mean, fascinating to have you, of course. We should listen to you. You're winner of the Entrepreneur of the Year when it comes to Stevie Awards. You've had American Business Award of Executive of the Year. So, Jessica, we thank you for some of your pearls of wisdom and indeed for some of the optimism surrounding a changing culture potentially across the gaming industry. Jessica Rovello, she's the CEO and co-founder of Arcadium. Meanwhile, let's talk about the shares of Alibaba. Lower on Thursday, China's online giant came out with a revenue forecast for the fiscal 2022 that, missed estimates. Meanwhile, sales were worse than expected for the second straight quarter. Net income, get this, plunging 81%. Alibaba's businesses have, of course, been hit by macroeconomic issues, but regulatory as well, and competitive turmoil. There is so much more ahead on Bloomberg, so stick with us, of course. We're going to be heading to break. Let's take a look at some of the few retailers out there and their earnings coming thick and fast. And Macy's and Kohl's, they paced gains on Thursday, both chains benefiting from elevated consumer demand as the pandemic wanes. Plus, Macy's pushes its digital strategic moves, which investors, they've wanted. This is Bloomberg. Supply constraint issues, they aren't just having an impact on retailers and consumers, it's also, of course, affecting the distribution of COVID-19 vaccines. Now, Microsoft co-founder and billionaire Bill Gates spoke about those issues at Bloomberg New Economy Forum in Singapore.
Well, the vaccines are very good news, and the supply constraints will be largely solved as we get out into the middle of next year. And so we'll be limited by the logistics and the demand. In a lot of countries, it's not clear what the demand level will be. Ironically, in a country like many in sub-Saharan Africa, where the epidemic hasn't been as visible, your demand for the vaccine, it's challenging to generate that, but we'll do the best we can on that. The other thing that's pretty impressive is that Merck and now Pfizer have oral antivirals that the Merck drug we've been able to reformulate to get it to be less than $8. And so we'll be able to have anyone whose age or medical condition makes them have significant risk immediately begin what's called presumptive treatment as soon as they test positive. So between natural immunity, vaccine immunity, and these oral treatments that can scale up in a way that the antibodies never did, the death rate and the severe disease rates ought to be coming down pretty dramatically. And, by next summer, getting to be, say, quite a bit lower than the average seasonal flu level is, assuming there's no surprise variants, which right now the evidence is that's not that likely, but it can never be ruled out.
What do you think, you just mentioned next summer, what do you think victory looks like in this? is it effectively taking COVID back? You also mentioned the flu. Is it effectively making COVID a kind of flu-like disease? I know it is, but is that the kind of version of what victory is in your brain?
Yeah, things are fairly binary. I mean, if, death rates from driving were 10 times what they are, people might think, wow, shall we do it or not? Flu is accepted. The, average years of life lost for both flu and COVID is about 8 years because it's so prevalent in the elder versus the young. And we accept about a 60,000 average per year rate there. Now, I happen to think as part of the tools innovation to avoid the next pandemic, we ought to go and eradicate flu as well, because its mutations are another source of a significant source of future pandemic risk. But yes, the idea that economic activity will resume in full once you get to flu levels, it's very likely. Now, you'll have some hot spots where you'll still have to have non-pharmaceutical interventions or, huge incentives for people to get protected.
Just to push you a bit on the vaccination things, if you look at the way that countries are dealing with this, you have two very different ways of doing it. If you're going to take two extremes, you could argue there's the country which I live in, Britain, which tends to have opened up a lot, relied on vaccination, and is taking a slight we'll see what happens attitude at one end. At the other end, you have China, which is really clamping down, but actually closing things down. Where do you, when you look at those, what do you see problems with both, or which sort of basic strategy do you have more trust in?
Well, any country that was able to do what China did and stop it early before it exponentiated up, where you had case rates, above 2% of population, that's a huge blessing that they were able to do that. That means they have very little natural immunity, and so they have to drive their vaccination coverage up dramatically before they drop sort of that wall that's allowed them to exclude infection from coming in.
Of course, Microsoft co-founder Bill Gates talking all things COVID-19. Now, coming up, despite beating analysts' forecast during Wednesday's earnings, Sonos is already tempering expectations as it looks to the holiday season and the supply chain issues that are going to affect it. And we're talking live with the company's CEO about what they're doing to mitigate some of the issues there. Of course, we've got to dig into the latest lawsuit with Google as well. Stick with us for that conversation. From New York, this is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Now, as chips on the table for General Motors, the company says it's working some of the biggest names in global semiconductors to co-develop new chips that will cut the number of microcontroller units, or MCUs, that go into its cars by 95%. Bloomberg's Ed Ludlow, resident chip expert, is with us to, tell us why this is so important.
Well, it's important because any given car, whether it's a gas-powered car or an EV in the future, has dozens of microcontroller units, MCUs, chips that we previously took for granted. And now we know they're so crucial because all the automakers had to stop production and there weren't any new cars to buy on the forecourt. And GM is basically saying it's assembling a super team. It's basically gathered the who's who of chip makers, chip designers, and also those with the manufacturing capacity, including TSMC. Look at that chart, Caroline. That just is not just a random list of the world's greatest in chip makers. It's actually who GM say they're going to work with. And what they want to do is consolidate, right? Each of those microcontrol units does something simple, like when you press a button for the air conditioning, that usually relies on a single chip. They want to get multifunctionality across several chips. And as you know, the story is that automakers have had to wait. Lead times for chips have been growing, and they're still growing, although at a slower pace, the time from ordering a semiconductor to when you get it. And I guess what I'm thinking about here is that this whole situation over the last 12 months, for automakers, you see the lead times there, the sort of drama of that chart. it's not in the short term a fix. This is a long-term fix for General Motors. But others in hardware and technology, have they had to just rethink the supply chain completely? Redesign, look at the underlying technology, look at how they do things so that in the future, this doesn't happen again? It's a great question for guests going forward.
Yeah, meanwhile, of course, Ford exploring it's buying its chips directly from global foundries. It would look like everyone's trying to make their supply chain that much more effective and efficient. Ed, always so smart, we thank you. And let's stick on that pesky supply chain issue. I mean, it's not pesky, it's monumental. Audio company, Sonos, it just reported its fourth quarter earnings that beat Wall Street expectations. However, CEO Patrick Spence did warn that, look, the chip shortages over the holiday season will be challenging, especially for growth. Let's talk to him a little bit more about it all. Sonos CEO Patrick Spence joining us now. Thank you so much, Patrick. And I thought it was really important how transparent you were on all of this, that, you know, you're hitting a really important quarter, the holiday quarter, and supply chains are just woeful. How are you managing to navigate it as best you can?
Yeah, and thanks for having me, Caroline. You know, it's been something we've been battling really for a year, right? And that's why I'm so proud and grateful of the way the team has performed to deliver the kind of growth we reported yesterday, coming in ahead of expectations and 30% revenue growth, 150% EBITDA growth. So just an outstanding year. But you're right, we were very transparent about the fact that we have a ton of demand right now. I think the consumer is extremely strong. And it's going to be challenging in this quarter. And that is all the supply chain side of things. I mean, Ed just hit it. You know, we've had to look at how we replace some of those chips that we have in our products. And we have dozens of components and a lot have been short just given the industry-wide supply chain crunch. And so you look at putting, you know, different chips in, working with other suppliers, going out in the open market and buying chips from others. So a whole bunch of different things that we're doing to try and mitigate it. But nonetheless, we're left in a situation where the December quarter is going to be a challenging one. And then we expect it to get better as the year ultimately proceeds.
Longer term, have you been thinking, what do you make of the onshoring of chip making, chip design? I mean, Apple going as far as to make their own chips, but then Ford looking at global foundries and wanting to bring the chip making into the United States. Are they the sort of solutions you've been looking at, more longer term perspective?
Yeah, definitely engaging with even more partners. I mean, being a smaller company than, you know, a GM or an Apple, we've obviously had to partner with a lot more companies to really get to where we are today. But we are definitely looking at where we can make our supply chain more resilient, right? And so it was only a year ago, we also diversified from China to Malaysia as well. So we have both China and Malaysia up and running. And then we're looking at some of those onshore options over time as some of our partners, right, our manufacturing partners move onshore. But look, we've been, as an industry, really building up the supply chain and all of that in Asia for 30 years, right? And so a lot of the component suppliers, not just the manufacturers, you know, that's a big task to bring back onshore. But I do think you will see that happen as part of building more resilient supply chains. And the pandemic's taught the industry a lot, right, in terms of needing to have that resilience and that localization, quite frankly. How
do you expect the holidays will look and feel to the end consumer? Is it going to be that they walk into a store and there just aren't the sound bars of yours that we're desperate to buy? Is it that they will just arrive a little bit late? How are you thinking that you're going to navigate the next few months?
I'd say consumers should get out there and order today. You can see even on our website or through our partners like a Best Buy or a Costco. It depends on the product that's out there. Sometimes you'll be able to get it right away. Sometimes you'll be waiting a few weeks. So I think more and more consumers are getting the message, though, and probably getting out there sooner. We have a tremendous backlog right now. And the good news is that throughout the year, consumers have been sticking with us. I think Sonos is more of a considered purchase. So we've been watching very carefully, like cancellation rates from both our consumers and then as well our retailers and channel partners. And, you know, we're in the enviable position where those cancellation rates have remained very, very low and consistent throughout the year. And so we expect any demand that doesn't get fulfilled in this December quarter to be fulfilled through the rest of 2022. We're obviously watching that very closely.
Let's talk about partners and previous partnerships that have turned sour. Of course, we do know that you've sued Google. There's talk potentially that you might look at Amazon as well. How is that all progressing from your perspective?
Yeah, and to be clear, Google's still a partner. We support YouTube Music. We work with them on the Google Voice Assistant. And so we continue to work with them. I think that's part of existing in the tech industry these days, right, is the partnership. And then as well, sometimes issues that you just can't resolve, you know, through the regular negotiations. And so we're very confident. We had a very positive ruling in August from the ITC, and tomorrow we should get an update from the ITC on the next step in that procedure. But it's definitely something that we're very confident in. We invented the category, and we believe that really we need to stand up for all inventors and smaller companies in the face of anyone trying to trample on our intellectual property rights. That's
really interesting that you're able to sort of disassociate. I mean, I know that frenemies is kind of the way it goes. We look at the relationship between chip makers and Apple and the things in the past. But how do you still have a good working relationship with the likes of Google when it does seem to have got relatively personal?
Yeah, it's I think it's mutually beneficial at the end of the day, and so some of those things they want to be in the homes that Sonos is in today, and we want to be able to offer customers all of the services that are out there. That's one of our strengths. We're not going to try to lock you into one ecosystem as some of the big tech players will. So we try to offer all of that choice. So it makes sense for us and it makes sense for them because they want to be in all of the very attractive homes that we're now in 12.6 million of.
What about the strategy going forward for voice assistants? To build your own, partner? Where does it go?
Yeah, I think it's a combination. We acquired a company around voice, in the past, and so we think there's some really interesting opportunities there. We also want to support what's happening in the industry. So we've supported, and we were the first to support both Amazon's Alexa and then Google's Assistant. And we think at the end of the day, the most important thing is a great experience. And behind the scenes on that is making sure customers get choice of whatever they want to use. We do not think it's the right thing to lock people into a particular ecosystem or force them to choose one. And so we remain the standard when it comes to being open to all alternatives.
On the legal front, are you joining the antitrust suits with the state AGs, with the DOJ at all?
Yeah, I testified in front of the Congressional Committee last year. Certainly, they ask us a lot of questions in terms of our experience. I do think I've been in the tech industry for 23 years. This is the most attention I've seen on this. So we've heard it from Europe. We've heard it from the American authorities as well, Canada, Australia. So there's a lot of interest in it right now. And certainly, we want to cooperate because we believe in a world where there can be more startups and more innovative companies. And they shouldn't, just have, bigger players copy what they're doing and try and, trample their intellectual property rights.
And you don't want legal issues to bog you down in your innovation. One thing you're really excited about in terms of your next innovation, next product?
Oh, well, our roadmap is exciting. We always do at least two new products every year. We just recently brought out our new Beam Generation 2 soundbar. And with this huge trend I've been talking a lot about called Hollywood at Home, we just think we have a huge tailwind behind that. And, and so we're super excited about a lot of new products we have coming in 2022 and beyond. We also announced yesterday that we're ahead of our targets for 2024. So we feel really good about where we are today.
As a parent, I am all in on Hollywood at Home. Patrick Spence, we thank you so much. Sonos CEO, thanks for the time. Coming up, a look at this week's unequal recovery. We talk with Dina Shakir of Lux Capital about capital raised and progress being made in female-led businesses. Don't want to miss it. This is Bloomberg. It's becoming a record year for female founders. So far, women have raised roughly $40 billion across 2,500 deals, nearly doubling the 2019 record of $24 billion. And that's not it. According to a recent data from PitchBook, women-led companies are also outperforming the market, with their value rising 144% from 2020. Now, I discuss in this week's Unequal Recovery series and all of these sorts of focuses and how it can still continue to improve. Lux Capital partner Dina Shakir was here in the studio, in the flesh, and talking about the drive to keep on shifting and keep up this momentum.
I'm delighted to say for the first time in many years, we've actually have some progress to report on, both in terms of the number of women at the table that are writing checks into companies, as well as the number of women who are founding companies and receiving venture dollars. Even more, we're actually seeing more exits and quicker time to exits from female-founded companies. And so there's some exciting news to report, but there is a lot of work that remains to be done here.
And in some ways, the numbers show sort of a near doubling in terms of amount raised for female entrepreneurs. But what was the tipping point, do you think? In some weird way, has this been the silver lining of what became, of course, a health crisis, an economic crisis and a social crisis, and this moment of reckoning that more needed to be done?
Well, I think the pandemic across the board, as you have reported about and spoken with guests about, has generally been a blow for underrepresented people in general. Unfortunately, that has been the case for women. It has especially been the case for mothers. It has been the case even more so for women of color and mothers of color and intersectional individuals and communities. And that really also was the case in the venture world. For a period of time, especially in 2020, we saw a dip in dollars that was going toward women-founded companies, both in terms of the actual number of dollars as well as the percentage of dollars. And that was despite the fact that we are in one of the most prolific and productive periods of technological innovation and venture deal activity. And I think there are many reasons that that is the case, a lot of which have to do with sort of systemic issues related to both to women as well as especially to communities of color. Now that is starting to change, and it is not a coincidence that it is changing both on the check writing side and on the venture-funded founder side, because there is data that shows that women investors tend to attract female founders and vice versa. There is a natural symbiosis that happens there. And there is also data that shows that women-founded companies perform better. And that's what I really like to speak to at the end of the day, because it is about the bottom line.
It's about performance. I mean, we've seen this in terms of money management, many feeling that women who control money can, in many ways, outperform because they have a different view on risk. We have had these moments of great glory this year. I just think of how Spanx has been selling amounts of their business and of course, founded by a female. We've had Rent the Runway going public, and to see a mother and her child ringing that bell together was like just such a moving moment. What businesses are being founded that you're really excited about? What problems are currently being fixed that you think are really notable?
Oh, there are so many, and I'm so glad you brought up the public exits and the sort of symbolism and the inspiration of those moments. When I saw Rent the Runway and Bumble and Anjali from Vimeo, and really like across the board, it seems like almost on a weekly basis, in some cases multiple times a week. It is a very different view than we're used to seeing over there ringing the bell. And my first reaction was to go home and show my daughter. Yes. And that's super exciting. And that's, of course, on the exit side. On the early stage side, we are seeing so much talent that's innovating, in particular around areas like women's health, which has been relegated by many, wrongfully so, to a niche category, even though it's not only half the population, but where 80% of the dollars in healthcare are being spent.
And so that's where you've got money in Maven Clinic, for example. This is a company that's been raising phenomenal amounts of money, being able to show real growth. Where do we push this forward, therefore, as we still see what is a desperately unequal recovery as it stands, where it still seems women holding back as we still have a stop-start relationship with children getting safely back at school, as you do still see the haves and the have-nots become more evidently clear, particularly with those who have assets and those that don't. How are you continuing to push to tip the balance? What sort of companies are you seeking out at the moment?
Yeah, so there is still a lot of work to be done. And as I think about it, for me, my job as a venture capitalist, I have the word capitalist in my title, is to make money for my LPs, many of whom are some of the most philanthropic institutions out there. But I only do that by investing in the best founders and the best companies. And that is where the data is incredibly compelling. And if somebody were to arbitrage around early stage companies, well, they should be looking at women. They should be looking at founders of color. And the data shows that they outperform across the board, including, as I mentioned, faster time to exit. Diverse boards have better performance as well in terms of board members, which really should start as a practice much earlier than the sort of last minute, we're going public, let's add a board member type of activity. And so I think it's quite compelling. And they're also innovating in areas that are ripe for disruption. And that means they're opening up and in some cases creating categories that will be venture returners for investors.
How do we stop the same problems happening again? At the moment, we're all very taken with Web 3.0, whether that be metaverse, and of course Facebook rebranding itself as Meta in that name. We've got the future of cryptocurrencies, NFTs, digital art, but still within that you see time and time again that most NFT and digital artists tend to be white men, and a lot of the money is not flowing to diverse creators. How do we ensure that those sorts of biases that very naturally occurred in Web 2.0 don't happen again in Web 3.0?
Yes. Well, I think it starts with making sure that the investors around the table are representative of the population that we live in, because there is that natural attraction that happens, with founders and investors. I actually have been heartened to see, at least anecdotally, let's see until PitchBook comes out with their data on this, but it does seem to me that a lot of the early stage founders I'm seeing in Web3 look very different than the founders we saw with Web 1.0. And I hope that will transcend into large exits and outcomes, because there is clearly a lot of wealth to be created here, and wealth generation in these communities will create more opportunities, more investors, and more investment down the road. And that's how we move the needle over time.
And lastly, you, of course, come traveling here at last, able to travel a little bit more. Here on the East Coast, you are based out in Palo Alto. How are you ensuring that you get the geographical diversity, which, of course, in many ways shines a light on more diverse entrepreneurs as well?
Absolutely. Well, I think the Zoom world has been a game changer for everyone, of course. In the world of venture, this notion of, traditionally investing only in your zip code, or, some storied investors had, commented previously that they would only invest where they could drive to the board meeting, or where they had the sort of physical proximity. It's just not relevant anymore, even though we are returning to travel. And what that means is, when investors were Zooming with founders, we often actually had no idea where they were based.
Yes.
And it didn't really matter. And that certainly was the case even on the hiring front with the companies that we're looking at. So that's changed the game. And we're seeing a lot more international investment, which is very exciting, where there are opportunities for leapfrog innovation, whether it's, in LATAM, in Africa, in the Middle East, in Southeast Asia. Lots of opportunities where, investors might not have been too excited to invest in different times.
Dina Shaka there, partner at Lux Capital. Great conversation. Great to have her in New York as well. Now, a story we continue to watch earlier this month, Cathie Wood ARK Innovation ETF. Well, it owns Zillow shares, valued at well over $600 million worth. Now the fund owns less than 1,000 shares, with just $50,000. Shares of Zillow are down about 40% this month, of course, following the company's decision to shut down its home flipping operation. Coming up, how the pandemic has ushered in a new age of online grocery shopping and how tech can help with food quality. That's next. This is Bloomberg. Our grocery shopping habits have changed during the pandemic, and like many other aspects of our lives, some of that has moved online. Online grocery sales have grown by more than half in 2020. Is this trend staying around as we hopefully slowly move outside of the pandemic? Abhi Ramesh is with us. He's the CEO of Misfits Markets, the direct-to-consumer online grocer focusing on sustainability, accessibility, of course, making sort of those unloved fruits and vegetables get through your door. And how is sales? Is it going as strong as ever?
It is, yes. We saw the same huge boost during 2020 during the pandemic that I'd say all other grocery platforms and food e-commerce companies have seen. And so far in 2021, I'd say we've seen continued strength. We've seen a lot of those purchasing habits that customers have retained post-pandemic, and basket sizes are higher than ever. Order frequency is as high as it was a year and a half ago. So we're really excited.
You're expanding in new states. Tell us why California and the like, and how you continue to do that.
Sure. So we're approaching grocery from a pretty different angle when you compare us to a lot of the other online grocery providers out there. Our goal is to build the affordable grocery store online that doesn't exist today. And our argument is that most other online grocery retailers are still focused on the premium, super affluent urban segment of the customer demographic. And our view is, hey, there's 100 million other households in the US that don't currently have access to the services that the urban areas do. So we started off on the East Coast. We've expanded gradually out west, and California is the biggest market that we sort of haven't been in, and we're launching. We actually officially started launching in California last week. And when you look at California, everyone thinks about the major metro areas, LA, San Diego, San Francisco, and what people forget about is about 1 in 5 California households are in food deserts and currently don't have access to fresh, affordable, healthy food, and we're trying to solve that.
Talk to us about supply chain issues. I feel it's pervasive. How has it affected you?
It's been a big challenge. It's over the past 6 to 8 months. We've seen, continued increases in freight prices, inbound and outbound. The cost of food has gone up pretty substantially across the board. When we look at items like, organic avocados, those have probably doubled in price over the past year. The cost of labor has increased with a lot of labor shortages we talked about. Packaging has gone up multiple times. So definitely been a challenge. I'd say, when we look at our supply chain, we have a lot fewer touch points than the average grocery retailer. We go from farm or CPG manufacturer to our warehouse, from our warehouse to the household. So because of the limited touch points, we've been able to, I'd say, shield ourselves more so than the average retailer from some of that inflationary price pressure, but still definitely a challenge.
We've only got a minute left, but differentiation. How do you differentiate yourself from the competition?
It's a great question. A lot of online grocery businesses out there. Values are our special word. We're building a new food value chain. We're buying food from farmers, from CPG manufacturers that other retailers can't buy, won't buy for a variety of somewhat irrational reasons. And then on the customer side of things, we're providing 30 to 50% discounts compared to traditional grocery store prices delivered to your doorstep. That type of value you can't really get elsewhere.
Avi Ramesh, great to have some time with you, Misfits Market CEO. That does it for this edition of Bloomberg Technology. Stick with us. New York today, back to San Francisco tomorrow. This is Bloomberg.